What are the most powerful people in the world doing? And those are the central banks. They haven't stopped buying gold. In fact, they've doubled down on it. So I wouldn't look at the price. I wouldn't look at the metrics. The price, the inflation, all of these things are manipulated by the Bureau of Labor Statistics and a government who doesn't want people knowing the truth, doesn't want people abandoning the system, doesn't want people holding alternatives to the system. So, yeah, wouldn't surprise me to see a big spike, but I think more realistically, you will see a continued appreciation of gold uh, in a very substantial manner. Look, my mentor told me if you make 7% per year, as Richard Russell, you're a rock star, and gold quietly has averaged 9.9% for almost 30 years.
Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from social medias. I'm delighted to have one of the biggest and most respected gold and silver expert in my show. He's the president and CEO of Miles Franklin Precious Metals, Mr. Andy Schectman. Welcome, sir.
Hey, good to be back. Thanks for having me, brother. Happy New Year to you.
Yeah, same to you. I look forward for this chat. Maybe we should start with the central banks. Central banks around the world continue their great gold grab in November. Based on available reported data, central banks bought a net of 53 tons in November. The National Bank of Poland was the biggest buyer, while the China People's Bank of China reported first edition since April. How do you interpret it, increased volumes and especially China getting back as a buyer, which is somehow hard to believe that they didn't accumulate in the meantime? What's your
Yeah,
take?
that story was a lie, and the import-export numbers coming out of the UK and out of Switzerland betrayed that false narrative. They've been buying all along, and when the data that is supposedly supposed to go to the IMF on gold purchases is gathered, it is not gathered if the gold that is accumulated, let's say, for example, is accumulated by a proxy bank, like a commercial bank on behalf of the PBOC or a sovereign wealth fund on behalf of the PBOC, or perhaps the PLA, the People's Liberation Army, which probably owns more gold or quite a bit, as pretty darn close to as much anyway, as the PBOC. That is not reported. Or if they accumulate gold, and again, this is all supposed to be reported to the IMF, or if they accumulate gold that is under 999 pure. And so, for example, there have been reports going all over the place, and I validated them with interviews I've done with Sean Kuhn and Keith Newmeyer, where we are seeing China go directly to the miners in South America, disintermediating both the marketplace, really, and the bullion banks. They're going directly to the miners and saying, "We'll take your concentrate and your doré." The doré is a crudely refined bar that the miners will refine to maybe 30, 40, 50%, and then send it to the refiners for pure refining. Or the concentrate is the byproduct of all of this. It's like a sludge, a jar full of sludge with a large concentrate of silver and gold in it. They're buying this concentrate and these doré bars at a large premium to what the West will pay and taking it home and refining it in China, thereby disintermediating the marketplace, thereby being completely opaque and not having it affect the price, nor the realization how much that any of these purchases, how much product, if you will, was taken out of the marketplace. Never even got to the marketplace. And you're right. The central banks, over the last decade, have bought 1.16 billion ounces of gold. That's $3.8 trillion. If you realize their currency reserves are about 12.3 trillion, it's roughly 25% um, of the reserves held by the central banks are in gold, and that is what they report. My belief is that they have far more than they're reporting. We can look at China as an example, and everyone always used to say my whole career, which goes back three and a half decades, that the numbers You go back 25 years ago, they would say to me, Andy, those numbers are so full of crap. The Chinese produce over 3, 4, 500 metric tons a year, and yet they're the largest producers in the world, and yet their numbers for most of my career were frozen at 1,250 metric tons. Never went higher. So they've been accumulating globally more than anyone. They produce more than anyone, and their numbers rarely change. And it doesn't suit them really any good to be open about it any more so than we have as the United States, who hasn't audited our gold holdings supposedly held by, the Federal Reserve on behalf of the Treasury, whether it be at the New York Fed or Fort Knox, um, since 1953. So I would simply say that the central banks realize that holding dollars is a dangerous game right now, whether it be through inflation or weaponization or even the potential for default. Obviously, it's the weaponization of the bond market that has created so much of this. But when we just simply look at a performance the past 25 years, since 2000, gold has appreciated by 9.9% per year compounding, whereas the 10-year Treasury, the performance has been one half of that. So gold has doubled the performance of the Treasury, has no counterparty risk. And that's largely because of the continued accumulation over the last decade plus by the central banks. So this is a trend that I think is in nowhere near over. And as we can see by how they've doubled down, in fact, if we look at the numbers in November by the central banks, largely led by India, the central banks doubled their 12-month moving average accumulation. So they're doubling down their efforts even after it became obvious who was going to win the White House this year. So, yeah, this is a trend I would expect to see continue.
Yeah, Andy, when it comes to price reporting transparency, I'm not sure that people understand that part, maybe in total. Can you walk me through the process of the price reporting for the biggest central banks? It seems complex due to a sporadic nature of reported purchases and the confidentiality of some transactions, right? It's
Well, it's
not.
just if the gold is purchased by the central bank, like if the PBOC, the People's Bank of China, says, this is the amount of gold that we bought. We had it imported from London, from the London Metals Exchange, and from the Swiss refiners. And the PBOC is officially buying it. Those numbers get reported to the IMF. What they produce, no. If it's that's not getting reported. If it's getting accumulated by a commercial bank, that's not reported to the IMF, or by a sovereign wealth fund. That's not reported by to the IMF. Or if the purity is under the threshold, that's not reported to the IMF. So it's kind of like maybe 1 out of 5 ounces that they buy or less is reported just you know, to maintain status quo. But it doesn't do them any good. Look, if the idea is that at some point gold recaptures its place in monetary policy, which I do believe it will. I think it will be revalued. I think it will find itself as a peg to a new system. You can only piss in the punch bowl, pardon my French, so much before people say, I'm not drinking that ever again. And in order to inspire confidence, you need to have a peg. And this is where I've said for 4 years consistently that I believe there will be a marriage between blockchain technology, and you can see all of a sudden this is now becoming more and more and more in your face, this digital surveillance state, if you will, more acceptance to cryptocurrencies, more acceptance to a digital transformation, and something solid like gold. Now, why would the most powerful bank in the world, the Bank of International Settlements, reclassify gold as the only other tier one asset? They wouldn't unless this was in 2019. This goes along with the central banks buying hand over fist. Why? It's not that they are buying, but why are they buying? That's the important. The fact that they are is, yeah, that's important, but only a fraction as important as why are they buying, right? You see someone every day pounding, who never drank before, pounding shots of tequila because he seems so upset. It's not the fact that he's pounding the tequila, but why? What's bothering you, right? Same thing here. Why are they doing this? Well, they reclassified it as the only other tier one asset. And this Keynesian experiment, if you will, is coming to an end and the system needs a new tether, if you will, a new peg, and gold will be that peg. And I just think it's not in the vested interest of the countries who understand this to be open about how much they're accumulating. We live in a world where information travels at the speed of light. If Donald Trump was walking down the stairs and stubbed his toe badly today, we would all know about it in the next 20 minutes because it would be everywhere. And my point is that these countries, it doesn't serve them a purpose if they ultimately understand that the most powerful bank in the world probably clued them in and said, look, we're reclassifying gold as the only other tier one asset. You should start accumulating it for the next system. And the central banks kind of seem to be doing that. So the why is the important part. And that's the part where I think and the US is no different. Why won't the US audit the gold held on behalf of the American people? It belongs to us. Why? The answers that they cite, too expensive, logistics, that's a bunch of bullshit, period. The most powerful country in the world can't even audit its own gold? Right. So the point of it is that these countries, I think, believe and understand that what is coming will be a transformation to a system that lacks trust to one that is inspiring trust through blockchain and a commodity peg like gold, which is the only other tier one asset in the world as reclassified by the most powerful bank on the planet, the BIS. And if that is the case, and everyone is quietly trying to gather as much as they can quietly, shh, don't tell anyone before they flip the switch, then it wouldn't do any good to say, hey, yeah, the switch is getting flipped pretty soon. Gold's going to find its place in the world and probably be much higher. Well, everybody would run to crowd them out of their trade in a matter of seconds. So it's the why that matters and the lack of being open and forthright, whether it be the BRICS nations, China, Russia, Saudi Arabia. Saudi Arabia got caught doing the same thing just a few months ago. Didn't tell the IMF, but the import-export numbers coming out of the UK flagged it. Oh, it was a mistake. We're so sorry. No, it's not. They're all trying to quietly reposition without upsetting the apple cart in a world where information travels faster than the speed of light, because this is kind of like that moment where you have to reposition. And it's much easier to reposition freely than it is with a gun to your head and having to move quickly or miss out. And so this is it's curiously quiet, if you will, all of the central banks, including the Federal Reserve, as to their not only the amount of gold that they own, but the amount of gold that they are accumulating.
All great points. Beside central banks buying, what events on the precious metals market from 2024 do you see as a crucial for 2025 and beyond?
So, oh, sorry, pardon me. Camera moved there.
No worries.
So 2025, I think, is going to be an interesting year. I think it will, maybe you could classify it as simple as it's inflate or die. I think that in terms of gold, it has nowhere to go but up because I think paper money has nowhere to go but down. I do believe that. I think that inflation is here to stay. And I think that's something that I would be focusing on very, very closely as how it affects the ultimate status of the markets, gold included. Look, let's just talk about the debt for a minute. Our debt is growing at a rate that is unsustainable. It's at $36 trillion. That doesn't take into account Medicare, Medicaid, Social Security, government military pensions, which exceed $175 trillion. And let's baseline it and remember that a trillion seconds ago was 31,688 years ago. And the debt right now, you know, you got Doge and Elon and Vivek are going to come and chop everything, but the debt is the overwhelming majority of it is in three areas. The first is non-discretionary Social benefits like Social Security and Medicaid, no one's going to touch that. They already said they wouldn't. The second is defense spending. They won't touch that. And the third is interest on the national debt. They can't touch that. So this is I think we're going to see more spending and not less. And despite the need to combat this inflation, what is the Fed doing? Well, they're lowering rates instead of raising them. So they're not really combating anything. They've already signaled the white flag to inflation. And policymakers are not reducing spending. The first 2 months, now granted, this is the economy Trump is going to inherit. But the first 2 months of the fiscal year, October, November for 2025, showed almost $1 trillion in debt. The worst 2 month start to the Treasury in the history of the country. It took till 2009 to spend that much in a year. We just did it in 2 months. And so I don't know. I just think that this is a situation where just in October, November alone, the tax revenue was, five, $600 billion, and they're spending $1.2 trillion. This is not sustainable. This game is just not sustainable. So in 2025, what I would look for, I guess, would be a country that, administration that wants to downsize the government, impose tariffs, and ultimately for lower interest rates and a weaker dollar. Um, they can't stop spending money because if they do, this whole pyramid of debt that's been built up over many decades comes crashing down. And it makes it worse that President Trump, who I am thrilled won the election, is trying to use the dollar as a weapon of force to force other countries to use our currency rather than extending the olive branch. All of these things will accelerate inflation and ultimately the de-dollarization trend that is continuing. So I look for a year where, or at least 2025, I think will be marked by high inflation and the ramifications that that is going to have not only on markets in general, but in particular the debt market, the bond market, and we can see how that's already playing out, where the Fed has lowered interest rates in 3 meetings by over 100 basis points on the short end of the curve, but the back end, the 10-year Treasury, has gone up by over 100 basis points, and that is a a bad omen because that's where the entire economy runs off of the 10 years. So I guess I kind of all over the place here, but I would say 2025 brings a weaker dollar as the government monetizes its debt to address its debt to GDP of almost 130%. And I look at bond market yields on the 10-year Treasury to go higher, even as they're lowering the federal funds rate, which we've seen. And I look for inflation, and all of these things are going to have reverberations through the economy. I don't think people have factored in yet as they're still kind of buzzed from the Trump euphoria, and rightfully so. I mean, I'll just simply say we've lived through bizarro world for the last 4 years. We've lived through a whitewashing of our culture. So there's reason to be optimistic and euphoric, but it doesn't change the massive amount of indebtedness, the rising interest rates, the inflation, the commercial real estate, the banks, all of these things have yet to be resolved. And quite frankly, I'm not optimistic that we won't get through those without a considerable amount of pain.
Yeah, you name few factors that could help the gold price go up, of course. But what event specifically do you expect to happen first in 2025 that could lift the price of gold higher?
Well, I mean, look, the delinquency rate of office mortgages, commercial real estate has spiked to 11%. That's an all-time high. Um, and, even during the financial crisis in '08, commercial real estate delinquency rates were at 10.7%. It's an all-time high. And this is like almost a disaster level. It's exploded over the past 2 years. And The office sector keeps on getting worse. There's $2 billion in commercial real estate debt that is becoming that just became delinquent in December, and as much of which here in 2025, about half of it needs to be reset at higher rates. I look for the banks to run into problems. I don't think we're anywhere near out of the banking issues. The banks are undercapitalized, they're over leveraged, and the funding programs, largely the BTFP, which is now expired, the Bank Term Funding Program, and um, the programs that were put into place to bail out these very overextended, undercapitalized banks, to me it's ominous. It's as if they could very quickly pull the plug on the system very, very quickly early into his administration, largely due to the banking problems. We had the first bank bail-in this country has seen this October, just a few months ago in Lindsay, Oklahoma, and it got virtually no press. I screamed about it for as long as I could. I think that to me is where I would focus primarily on my concern level, the banks. And we are not out of this yet, not even by a long shot. The banks, I think, are a ticking time bomb. And everything that is happening right now, in particular, rising 10-year yields, signals that this is the worst is yet to come, I guess I could say.
Yeah, when you mentioned banks, I read today that Goldman Sachs Group said it no longer sees gold reaching $3,000 per ounce by the end of this year, pushing the forecast to mid-2026 on expectations that the Federal Reserve will make fewer rate cuts. What's your comment on that?
Yeah, I think it's a bunch of nonsense. And so, they're so they don't make another 25 or 50 or 75 basis point cut. And really they shouldn't. Rates should go higher. The problem with rates going higher is that here again, this is when you run into bank problems. The banks are not able, the whole economy is not able to continue to um, service their debt in this rising interest rate environment. So if they don't lower rates, yeah, in theory, that's what they're saying. You have competition for fixed income like treasuries, which are paying a higher yield than as rates go higher than gold, which pays no yield at all. And so yeah, they would move inverse of each other, but no, I don't see that really as being an issue. The central banks are accumulating it. The problems in the economy are getting worse. And if they don't lower rates, and in fact, if they actually try to raise rates, and then we see rates in the 10-year even go higher, you're going to reach that point real quick where the economy runs into very, very, very big problems. And so this is the damned if they do, damned if they don't moment. The numbers that Goldman Sachs is talking about and they're flip-flopping and this and that to me mean nothing. And they've been wrong most of the time anyway.
Yeah, they've been wrong most of the time. I agree on that. Andy, we touched on short term, mid term, but when it comes to long term, do you see gold price with a steady rise by the end of the decade, or do you believe it will be more of a spike moves sharply up than a correction? How do you see that playing out?
I mean, I guess it just depends on how the whole ecosystem plays out. But as long as central banks are around trying to support their currencies, you will see gold move higher and higher and higher in the face of um, money creation and inflation that is baked into the system. They talk about the Fed striving for 2% inflation. They don't get to 2%. I don't even think in the best of times we've been at 2% over the last 20 years. It's always higher than that. In particular, the metrics that they use to measure inflation are a bunch of nonsense. Also, the numbers are much higher. There, you can add an eight to the inflation number they give us because they exclude so many of the things that are inflating: food, energy, and housing. And if things get too expensive, they change them, they replace them. John Williams of Shadow Stats will tell you inflation's 11%, not almost 3. But think about that. Even if it were 2%, take them at face value. Even if it were, that means in 10 years you lose 20% of your purchasing power. The currency is being insidiously inflated away. over time. And so, yes, I mean, gold is the tortoise in the race. Look at what it's done since 2000. It's gone 9.9% higher per year on average for the last 25 years, quietly, as the dollar from which we measure our wealth is continually sliding in value. So, yeah, I mean, there may be moments we live in a very fluid world where things keep changing day by day, where you could see major spikes or corrections. But in general, yes, I mean, gold just keeps marching forward in the face of a currency that keeps losing value day by day, month by month, year by year, through the incessant money creation and inflation that is baked into the system. But in a situation that we have right now, yeah, you're talking far too many potential problems in the system that could trigger that all at once moment where you see gold really, really take off. But I would simply take a step back and say, what are the most powerful people in the world doing? And those are the central banks. They haven't stopped buying gold. In fact, they've doubled down on it. So I wouldn't look at the price. I wouldn't look at the metrics. The price, the inflation, all of these things are manipulated by the Bureau of Labor Statistics and the government who doesn't want people knowing the truth, doesn't want people abandoning the system, doesn't want people holding alternatives to the system. So, yeah, wouldn't surprise me to see a big spike, but I think more realistically, you will see a continued appreciation of gold in a very substantial manner. Look, my mentor told me if you make 7% per year, as Richard Russell, you're a rock star. And gold quietly has averaged 9.9% for almost 30 years without any notice. It's not sexy, it's not attractive, it's not flashy, but it continues to move forward. I don't see any reason that will change.
When we talk about the profits, to your knowledge, Andy, were the gold miners highly profitable in 2024? I mean, the price of commodity is high, but the related costs are really going higher every day, every month. What are you hearing and seeing with the gold miners?
I mean, I own miners. I think everyone should own some. I don't pay as close of attention to them as I do the physical metal, just simply to say that they are massively undervalued. They have underperformed the actual bullion um, underneath them. I think that if you took the entire capitalization of every mining share on the planet, it's probably less than that of Coca-Cola. I think there are very few things that offer the asymmetrical risk reward that the mining shares do, meaning lowest downside, highest upside. I think you put it in the form of a pyramid. The mining shares belong in your assets should be in a form of a pyramid, where the base of your pyramid, 60+% should be in things like cash, even though cash is not the best place to be. Let's just put it there for now. Physical precious metals in your possession, paid for real estate, very conservative, low growth, low yield assets. The middle portion of your pyramid, 20% maybe, would be things like short-term treasuries throwing off a 5% yield,
What about
utility
crypto?
stocks paying a dividend, um, things that have a little bit more risk but throw off some return. And the top 10% would be cryptocurrencies, mining shares, things that are speculative but have massive upside. And the theory that the Swiss have used for over 300 years in developing this ideology is that if you lose everything on the top 10, just get crushed. You make nothing on the middle 20 or 30, as long as the 60 or 70% base of your pyramid is solid, stable, and not moving backwards, then you'll be okay. Of course, in a perfect world, you kill it on the top 10 and you do great on the middle, then the base doesn't matter. And a 10% allocation of assets to of your asset portfolio to mining shares can outperform the entire base below it. And the same thing is true of cryptocurrencies, but they don't belong in the base. You don't invert your pyramid to speculation. So yes, I think there's massive opportunity in the mining shares, which have been beaten down unmercifully. And I think you look at people who are truly successful in investing, that's what they're looking for. Assets that have fallen out of favor, even though the um, the idea behind owning them, the fundamentals really are quite strong. So yeah, I'm a big fan of mining shares, especially in an environment like now where their true value has really been distorted over time.
Right. Let's touch a bit on silver as well. Do you believe that the stage is finally ready for $50 silver and your view on the silver supply and demand picture?
I think it's been ready for $50 for a long time. I think you have um, massive short positions on silver in London and in COMEX, but some interesting things happened here recently. Let me read something to you here if I can find it. I do think silver is the most undervalued asset on the planet. Truly do think that. But when we talk about silver, and again, the Chinese buying all this concentrate, 70 plus percent of almost 80% of all of their industrial applications right now are being that need silver are being fueled by silver concentrate that they're getting directly from the miners in South America, disintermediating the marketplace. It's actually quite genius. And so, but when we talk about silver, let's first talk about the deficit. So 282 million ounce shortfall in 2024, the sixth consecutive year, the largest since 2020. We're well over a billion ounces in negative territory over that period of time. But what has me interested is the amount of deliveries in December. On the COMEX, 45.8 million ounces were delivered either physically off of New York Exchange or exchange for physical, where a contract is either transferred to London off of COMEX or to Hong Kong off of COMEX to a Brinks facility, which is indeed a COMEX contract. Um, to me, there are very few things I've ever seen in 35 years of finance that offer what silver offers. And you have massive drawdowns on the LBMA and on COMEX. You have a shortage of supply versus demand to the tune of a 1 billion plus 4 year running shortfall, um, and an expansion in its uses in military, in green, in digital applications, alongside of its monetary renaissance. So there are very few commodities in the world that have plurality in uses. Usually a commodity is used for like one thing primarily. Like copper is industrial, like gold has some industrial, but it's primarily monetary. Silver, on the other hand, is 100% monetary, but it also has huge implications in green, in digital, in military, in places that are expanding. And at the same time, when you look in London, kind of the crux of the manipulation on COMEX, you have 8 commercial banks short about 100 million ounces right now. They were short about 150 million ounces, but they covered 50 million of those ounces, much of which was just delivered off the exchange, covering their shorts. People stood for delivery. But in London, it's a different story. In London, those same banks are short um, roughly per year. Let's just go per year. Per year right now, they are shorting in London roughly 2 point, excuse me, per day. Let me just back this up for a moment. Per day, they're trading in London 2.9 billion ounces of silver per day on
Unbelievable.
paper contracts. That's 3.5 times annual global mine supply. They're short between totally 4 to 6 billion ounces of silver. It's opaque there. It's not as transparent. It's not an exchange. It's an over-the-counter facility. So there's less rules. There's less transparency. But the numbers would play out to between 4 and 6 billion with a B ounces short. And these banks are trading. They say they trade 290 million ounces a day. Final settlement numbers, but those numbers are admittingly 10 times short because they only post the final numbers. So if you're trading 2.9 billion ounces a day, that's almost 4 years worth of global production. per day, of which about 95% of those contracts are paper contracts. These are the bullion banks trying to suppress the price. But what's different now than in any time I've ever been involved in this is the amount of silver that's being accumulated primarily by China, Russia, and India. India has bought over 900 million ounces over the past 3.5, 4 years. That's more than it is on COMEX and the LBMA combined, totally, including eligible and registered. Those eligible bars on COMEX are not even for delivery. So, Russia just came out and said, we're going to make it part of our global stockpile. I don't remember a government ever saying that. Russia is saying it. And now China's flying all around the world as the second largest producer of silver already on the planet. They're flying all around the world and buying concentrate and doré from miners. Why? Why are they going to such great effort to accumulate this stuff? Why is India buying it like it's going out of style? And I think it's very important to understand that there are very few assets I've ever seen, ever, that have the kind of potential that silver does. Its price is completely detached from reality, and that is largely due to the fact that you have these handful of Western banks that are suppressing it. And again, the big question is why? And I think it has a lot to do with the military industrial complex, which the need for silver and high-tech weaponry is off the charts. And then I've talked about this for the last year continuously. They used to produce numbers. Military used to produce numbers, the amount of silver that would go to the DoD. They don't do that anymore. The Silver Institute omits military applications in its supply demand numbers. So we have a 240 or 50 million ounce shortfall again this year, but oh wait, military is not in there. That's interesting. It always used to be. In 1942, Congress would tell you that they needed 200 million ounces of silver just for military per year. 200 million ounces, right? So where is it now when you have super high-tech weaponry? I've given speeches and have been contacted in public at the Vancouver Resource Investment Conference 2 years in a row, last year and the year before, after my speech, by a member of the Department of Defense who's in the audience and says, you are right. I designed the Tomahawk cruise missile. And you're right, there is silver in it. He told me that 2 years ago. And then he came back this year. He said, I don't remember how much is in it, but I'll find out. And he came back this last January, a year ago. I'll be going there in 2 weeks. Shout out to Jay Martin and the Vancouver Resource Investment Conference. Everyone should check it out in Vancouver, January 20th, I want to say, 21st. He said to me, you're right, Andy, I'll be damned. There's between 13 and 14 kilograms of silver in the cone of every Tomahawk. Well, that's just one form of cruise missile. What about all these high-tech missiles, the hypersonic missiles? About the aerospace, the sixth generation fighter the Chinese just made? About the stealth bomber? All these things have tremendous amounts of silver in it. Do you think there's any reason why the military industrial complex remove silver from the supply demand numbers? Do you think there's any reason to think about the why, not the what, the why? Why are 8 banks as stupid as a mud wall, trying to short silver in London to the tune of 4 to 6 billion ounces, of which 90+% of those trades are all paper, backed by just a balance sheet of a commercial bank who's at the behest of the central bank to drive the price down without risk? That will end. It ends because China, Russia, India, and the rest of the BRICS countries know what we're up to. And I'll give you an example of that. They are building the BRICS Precious Metals Exchange. They are, and it's in progress right now. But they're also building the BRICS Grain Exchange. And the gentleman who was involved in developing it publicly said last year, we produce and consume more wheat than the West does, but we can't control the price. That's controlled on COMEX. But with the development of this new grain exchange, that will change. Well, just morph that into the metals exchange. These are the countries. And by the way, there's now metals exchanges in Dubai, in Russia, in Shanghai, in the UAE, the Dubai in Brazil. And they're all melding together, and they're going to build a BRICS metals exchange. And just change what he said about grain to precious metals. They're playing the game. The reason they're not bitching and calling out to the world that we're manipulating the metals price is because we're playing right into their hand. It's jujitsu. It's using your opponent's leverage against them. And that's what they're doing. They are standing for delivery. No one ever stood for delivery. They are now copiously draining the world's exchanges using the suppressed paper price that the idiots in the West use so they can build weapons to sell all around the world in this never ending war cycle in every corner of the globe that the military industrial complex either is involved in or supporting both sides in the form of weapons. So, yeah, I think that that to me is the biggest development with silver. And that is what is very different than anything I've ever seen before. And that is why I think in the end, silver will be probably viewed as not only the most undervalued asset on the planet, but an asset that is strategic. It is not industrial. It is not monetary. It is strategic. It is needed. And I think it's the opportunity of a generation. It's right up there with, it's got that kind of Bitcoin-esque type of performance potential when the commercial banks, when one bank either fails to deliver or bails because they can't take the heat anymore, now that the rest of the world is standing for delivery, which they never did, on naked short contracts, not a smart plan. So yeah, I think silver is the asset choice of a generation if I had to make a statement.
That's great to hear. And the final question, is there any bear scenario for gold and silver?
I mean, sure, of course there is.
And which ones are they?
I, you know, Are they able to right the ship completely and totally? Are we able to somehow, pay off all of our debt? And which is, a trillion seconds ago was 31,688 years ago.
Yeah.
We have a $36 trillion debt and 175 or 80 trillion in unfunded liabilities. Interest rates are moving higher. The economy is getting slower. Um, yes, Trump could bring back our culture and get it moving in the right direction. But um, do you see a period of time in the near future where things get really great for the dollar and for this country? I hope that they get a lot better, but it's like the Shawshank Redemption. You have to crawl through 2 miles of crap to get to the other end. And when you're the largest debtor nation on the planet, and continue your fiscal irresponsibility, which we have been doing, when you're so far indebted and made so many promises to the populace and kept interest rates low for so long, where asset prices have been massively distorted, there is a huge bill to pay. So I'm not saying gold and silver will go higher forever, but no, I think that you know short of something completely and totally unforeseen happening, I look for gold and silver to continue their march higher. I think silver is an asset that could perform far better than anything that I would ever imagine, simply because it is so undervalued, has been held down for so long. Its geologic and price relationship to gold is way out of whack. Um, it's a good question. It's a fair question, but I really don't see how that happens. At least a sustained bear market, when the rest of the world is looking at, or much of the world is looking at gold as a preferred vehicle over just about any other asset class. And when the most powerful bank in the world reclassifies it as the only other tier one reserve asset on the planet next to US treasuries and dollars, and the central banks are doubling down and buying more than ever, they're the most well-informed traders in the world. The answer to me is no. I don't really see it. I mean, there'll be periods you could have um, softness. I don't know if I want to call it a bear market, but I don't really see it happening. No matter how optimistic we all are for President Trump, and I am, it doesn't take care of our indebtedness. And I think we are in store for a reset, whether it be a default, whether it be a hyperinflationary reset. I don't know, but there's no way that we will ever pay off this debt, at least in my mind, um, and in an economy that's moving in the wrong direction. So, no, I don't. I don't really see a sustained bear case for it. Doesn't necessarily mean that we see the crazy bull market either. I think it could just slowly continue to move higher and higher and higher in the face of a dollar that will continue to lose value. Now, there might be that moment where the world dumps dollars in treasuries, or maybe there's that moment where we've righted the ship and there's reason to be optimistic in a few years. Well, maybe I'll reevaluate my position, but For now, no. And I guess I'd like to say one other thing, and that is that I don't tell people to buy gold and silver to become wealthy. It is wealth. That has outlived two world wars, German hyperinflation, the Great Depression, every pandemic, and anything the world's ever thrown at it. And here we are, 5,000 years later, and the most well-informed traders in the world who first reclassified gold as the only other tier one asset are now buying it like it's going out of style. So you tell me, does that sound like something that, with the most informed players doing this quietly, that you would expect a bear run in? No, I think the question is framed in the respect of the optimism that is justified right now under the new administration to be, but it doesn't change the tunnel that we still need to crawl through in the Andy Dufresne Shawshank Redemption analogy. You still got to get through that tunnel of debt to get to the other side, and it's not pleasant. It won't be pleasant. And I think gold has a very important role to play in not only getting through that tunnel, but once you get through it, a new system, in my mind, will be pegged to gold. So I really do believe that. And I do think they'll peg it to gold and the marriage of blockchain technology and gold. There is no other reason that the most powerful group in the world, the BIS, would reclassify it as the only other tier one asset. To me, they have something in store for it. So ignore the noise, keep accumulating it. Silver is the most undervalued asset in the world, and understand that the dollar's had a good run, but we have really kind of messed up the extraordinary privilege of being the world reserve currency. And at this point, it's just math. Not much of a way to get back when you have the math at these levels where $1 trillion+ a year is going just to pay interest on the debt. And any nation that pays more in interest on the debt than they do in military spending is in very big trouble. And when you look at the Congressional Budget Office, it says even if they came in and balanced the budget, Vivek and Elon balance it, get rid of the 2 trillion in waste and even more, and balance it by 2031, 100% of tax revenue goes just to pay the interest on the debt.
Yeah.
And mandatory entitlement like Medicare and Medicaid, Social Security. Those things are not even on the balance sheet. So how does this country retain its power, its military prowess, when military spending is discretional? It's not mandatory. So you'd have to borrow money to even to build your military. So no, I don't see a sustained bear case, but I doesn't mean it goes straight up. There'll be bear markets within a continued bull run, um, but nothing to worry about at this point, as far as I'm concerned. And again, I'm not a perma bull. I'm just trying to look at every possible angle, and I don't see how it happens, at least not unless something special happens that really isn't on anyone's radar.